Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The cost of the Trump capricious bulldozing is going to be much higher interest rates, and the bond markets have set a key signal today. But first, US mortgage applications were virtually unchanged last week, up only 0.1% to be 2% higher than the same week a year ago. Mortgage interest rates eased very slightly, but they're still above 7%. And a 6-month high. No sign there that some political enthusiasm in part of the community extends to the residential real estate sector. And the current US retail impulse extends its more modest tone last week, up 4.5% from the same week a year ago, basically holding last week's pullback. This expansion level is near the bottom of the range compared with all the weeks in 2024. And also falling back post-election is the Conference Board's leading index survey tracking series for December. It actually is quite a big move from November. And the bond market got another chance to price long-term US Treasury yields this morning, again in the shadow of the federal debt authorization stress. This morning's tender for the US Treasury 20-year bond was again well supported, but that showed a sharp rise to a median yield of 4.86%. This was notably higher than the 4.62% at the also well-supported prior equivalent event a month ago, and is a shift that will undoubtedly move the secondary market later today. The bond markets are worried. Meanwhile, Canadian producer prices rose less than expected in December from November, but that still means Canadian PPI is 4.1% higher than year-ago levels. In Australia, they're getting a small uptick in economic activity. While the growth signal from the Westpac Melbourne Institute leading economic index is not particularly strong, it has shown a clear improvement from the persistently negative below-trend reads recorded over the prior 2 years. And we should probably note that today the prices of many commodities are falling and under pressure from building economic uncertainty. The US Treasury 10-year yield was last at 4.61% prior to the US Treasury tender, and up 3 basis points from this time yesterday. And the price of gold will start today at $2,758 an ounce, and up $10 from yesterday. Oil prices, though, are down at 50 US cents at just over $75.50 a barrel in the US, while the international Brent price is now just on $79 a barrel. And the Kiwi dollar is now under 56.6 US cents, a little change from this time yesterday, and holding its recent gain. Against the Aussie, we're also unchanged at 90.3 Australian cents. Against the euro, they were up 10 basis points at 54.4 euro cents. That all means our trade-weighted index starts today at just under 67.2 and up 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.